I am an associated member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRECIPIC. Position disclosure. I seem to be adding on an extra little long every day. I added on WOOF, but with Chewy's earnings after hours, I may have made a mistake. You need to know when your company is having another company that's similar to it that's reporting earnings. This WOOF was a nice trade on this breakout. It was $22 with option flow. It closed well enough. I booked enough money in it. I'm not super heavy, but there's like nothing to the left here with that option flow coming in. Brant had mentioned in the VTF at one point today that it's got a pretty large short flow. That's definitely something that we're paying attention to right now because we're seeing short squeezes. We'll talk about that. But Chewy down 12% after hours is a disaster. WOOF is 40% short flow. That's that big? That's big. I didn't realize it was that big. But looks like my trade may have just gotten screwed up with Chewy getting destroyed here. Chewy's now down 11.5%. Just trying to take a look at the numbers here that got posted in the VTF. Net sales are a small miss. Second quarter adjusted EBITDA is a large miss. They see Q3 net sales. That's also a miss. WOOF is a 25% short flow. Yeah, that's part of what I was interested in here. Let's just take a quick look at markets first before I start talking about stocks that are shorted. So how did we close today? So the SPYs closed down 0.1%. Sorry, closed up 0.1%. The Qs closed up about 0.25%. And the IWM, the Russell relative strength, again, still above 225, closing up about 0.7% or so on the day. The NASDAQ candle is a little bit of a concern. Let's take a look at that. But first, the S&P candle is kind of a nothing candle. Intraday here, we were strong for most of the day. We made new all-time highs. And then we rolled over pretty hard into the close for a small 0.1% gain. It's a really tight trading day for the S&P, which is what you would expect on September 1st. This does tend to be a slow week as we're still above the 80 MA on the daily chart. Going sideways is bullish because it lets that 80 MA catch up further, so we're not getting too extended, so that the bull market, the bull rally can stay intact. A little bit more concerning is this NASDAQ candle and Apple we need to speak about. So the NASDAQ is a little bit more extended, right? We're trading at about 381 compared to an 80 MA that's around 376.50 or so. So, we're extended by $4, little over $4. Not terrible on a $380 ETF, but a little bit extended all the same. We poked above the inside day high, tried to have a strong open. The Qs opened up really strong with what Apple did, and then the Qs and Apple rolled over really hard. This Apple was one of our trade ideas of the day for the break of the high of yesterday. So just to recap the daily chart here a little bit, 2 days ago was a huge day for Apple. Huge breakout day. 150 has been big resistance, and Apple broke that big resistance, continued its wedge pattern that it had broken out above. And then yesterday gave a nice tight little inside day. I had mentioned in yesterday's morning meeting that if we could get a dip to somewhere between like 150.50 and 151, that it probably would be a good spot to nibble on some versus 150. It did not dip that far because it just time corrected with a tight little inside day. So what I was looking for today, if the NASDAQ was going to show relative strength, which at the end of the day it did not, the Russell showed relative strength, which is actually what I prefer. But if Apple, like one of the ways in which I really like to approach markets is in terms of if-then statements. If Apple, if tech is going to show relative strength, then we might see momentum continuation through the inside day in Apple. So it's exactly what we were looking for. Created a great opening drive trade. If you were paying attention to it, you basically get to buy it as soon as the market opened, which I'm fine with. My favorite trades are oftentimes triggering in the first 5 minutes of the day. So this Apple just smacked through that inside day high, showed amazing momentum, big volume on that first candle, looking solid, creating a little bit of a bull flag. ADMA didn't catch up, so it price corrected back down, grinded its way up to new highs, but this rollover into the close and to make new lows into the close is not a good sign. That is a bearish signal, failed momentum continuation in Apple. Let's see what type of price correction this leads to. Technically, all this candle means is that you would get a price correction down to at least the ADMA. So 150 is that major breakout level. The ADMA is above that right now. The ADMA is at 150.50. So I'm curious to see if this candle applies the pressure to bring it back down to 150. And what I'm really curious to see is if it actually is able to hold 150 or if it leads to a deeper correction or not. Same thing going back to the NASDAQ. So those upside tails in big tech, Apple, Amazon also made a big upside tail, but Amazon was extended into its gap. Those upside tails, topping tails you can call them, or shooting star candlesticks, are bearish candles, but I think we just did a meeting about this in yesterday's afternoon meeting. All they mean is price correction, right? We talked about retracement versus reversal. You know, reversal sounds really cool. Like if I was on CNBC, I'd want to talk about reversals because I'd really want people paying attention to what I have to say, and it's all about your views and your ratings. Here, as much as it's cool if people are paying attention to what I have to say, my biggest motivation is to provide you guys with good information. So that candle is a retracement candle, not a reversal candle. It means a retracement back to equilibrium, which makes sense when you're a little bit extended. So the ADMA, that upper band of equilibrium in the Qs, is now at 176.50, and there's a level here at 175 that we broke out from. So it would not be the end of the world at all for the NASDAQ to pull back to somewhere between 377 and 375 and kind of retest that level, and we'll see if that is able to hold a support and give us another higher low for continuation. With that said, I can't help but have in the back of my head seasonality. The first 2 weeks of September are historically pretty bearish from the perspective of historical price action. I pointed out in the morning meeting that just the start of last September, where is that? What am I in the spies? Why am I lost? Where's my charting? Last September. Oh, here it is. Last September, right here. Let's zoom in on it. Let's zoom in on these couple months here. So you can see we had this really strong rally in July and August of last September that actually peaked with a parabolic move in the S&P. We're not in a parabolic move right now in the same way for the S&P on this time frame, but this coincided with a change in the VIX. I moved my moving average by accident. Let me get that back. This coincided with the VIX. There we go. You can just look at the degree of extension first of all on the SPYs here. SPYs got up to 359 basically on that day, and your ADMA was all the way down to 349. So that was $10 worth of extension, as opposed to right now. In the Qs we're seeing $4 of extension, and SPYs we're seeing $1 of extension. And that also coincided with the VIX moving higher along with the S&P on these days, which was a signal. And then we got this, starting on the third day of September, this really big price correction down that ended up pulling all the way back to September 24th was the absolute low here. And Apple in particular had this huge pullback from this gap up high of 138 all the way to an absolute low of 103. That's a bear market in Apple over the course of like 2.5 weeks or so. So that's a really big downside move. Again, seasonality, beginning of September, historically not good, but again, that's not the end all be all. Just because something tends to maybe happen at this time of the year in the past does not mean that it will happen again this time around, but it is also just extra information to actually pay attention to. So if you're looking at the SPYs here, SPYs look just fine, but if you look at the Qs, definitely got me a little bit nervous when it's September 1st and we're seeing a shooting star candle in the Qs, a shooting star candle at elevated prices in Apple, a shooting star candle into the gap in Amazon. Definitely makes me a little bit nervous, but all this technically means is a technical pullback to the ADMA, and we're not seeing confirmation in the S&P, and we're definitely not seeing confirmation in the IWM. The IWM had relative strength again today, is up 0.7% or so, is still above that key 225 level. We did not get above 225 and then immediately fail. We're holding above 225. So that is showing us relative strength again in value, mid caps, small caps, and this also tends to be when we see a lot of these speculative names start catching bids, and we're seeing that right now, and that gets me very excited. Obviously, you got your meme stocks, right? You got AMC. AMC got downgraded this morning, so AMC was weak. I actually made decent money on this thing to the short side. It's my fourth best stock of the day today. AMC. GameStop, we wanted to see if GameStop could give some continuation, though we noted that it was a little bit extended. GameStop tried to be strong early on in the day, and then once it broke this opening low, you know that GameStop is not giving you what you want today. You got to get out of the way, and then obviously it continued lower and it got weak. But if you tried that opening drive in GameStop, despite the extension of the daily chart, you know, you get a, whenever, as a great general rule, when a stock gives you an opening momentum move, and then it gives you a retracement that is in excess of 100% of that opening move, you are done with the stock. Stop yourself out. Hopefully you had a good enough of a game plan and were able to get a big enough of a move where you're able to cover your risk. You're done. The probability of a stock giving a new high on the day after an opening momentum drive is rather low. So this breaks its low, especially this type of stock that probably belongs at $40, then you want to get out of your way. I traded BlackBerry today. I went long BlackBerry. This was a good trade for me. It was actually one of my ideas. Actually, I think it was one of your guys' ideas. One of you guys brought this thing up to me in the morning meeting, and I said, you know what? We're seeing these short squeezes starting to pop in place, right? Look at what Skills did over the course of yesterday plus today's gap up. By the way, it is interesting to note that the Skills gap up was totally sold off and then it closed at lows, and this is still showing me a difference in market environment compared to right now, where we're seeing some of these speculative names, some of these stocks that have higher short floats kind of moving higher in fits and spurts, as opposed to back in February, January, every single one of them was rock and rolling, every single day was higher than the next. If this Skills stock did this in February, it would have opened up at 1375 or so like it did today, and it would have closed at 1550. And we're not seeing that across the board. We're seeing pockets of it. Look at BBIG. This BBIG was just insane continuation up to 12 bucks. So we're seeing pockets of it. It got me excited enough to take that WOOF trade through 22, which now I have regrets because of Chewy's earnings here after hours. But WOOF through 22, 25% of the stock is shorted. Just want to see if maybe this WOOF closes at 22.50 and then the next day it opens up at 23.50, the same way that Skills did, because that's what we're starting to see again in this market environment. However, it's not what happened. The Skills sold all the way back down. WOOF just got hit with Chewy's earnings here after hours. A stock like Wish tried to go above 750 and then totally failed. I traded this ANY today, though I ended up closing out of the position in the close. I think we saw some option flow hit on it. BBIG was rocking and rolling, and you know what? This thing was extended on the daily chart, but I was like, they're just moving everything. So I bought this on the high volume ignition type candle here. Around $7, was able to get my risk covered in this up move, and then I got stopped out of it into the close. So I got out of that for kind of a break-even day trade. And honestly, once I got my risk covered, I literally said out loud into the virtual trading floor, it's like, all right, my risk is covered. I guess I should just hold the other half of my position to see if it's a 20 tomorrow, because that's how this market's moving, right? You don't really know. Maybe you're getting in one of these things, and it's the next one of these BBIGs, or it's the next one of these Skills or whatever that just opens up so huge the next day and gives that huge continuation. So for me on a stock like this ANY, which is clearly a momentum name, I don't even know what this company is. Sphere 3D Corp, it sounds cool. I'm like, all right, my risk is covered. I'm not going to lose money in this thing. Let me just be max greed on this, and maybe I get a little lotto ticket here where I'm looking at a position that I end up keeping overnight because it closes at $8 and it's at 20 tomorrow. Obviously did not happen. It rolled over into the close along with the market rolling over the close, but that's how my thought process is going. Once the risk is covered on these types of things, I'm going for the big money. So anyway, back to BlackBerry. It was funny because I was making jokes off the open because Apple was ripping and BlackBerry was ripping. I was like, cell phones, man. Who's got the better cell phone, BlackBerry or Apple? I really don't know anymore. Based on the stocks, I really don't know. BlackBerry really trying to go with that opening momentum, as was Apple. So the buy was through 1150 that we were taking in BlackBerry. The opening volume was obviously there in a big way. So I took liquidity here, had a buy stop at 1150 for a momentum trade. Sell stop was at a penny below the low, so 10 cents worth of risk. Gave a 50-cent move in 5 minutes, and then didn't close well. So I got out of this one into the close as well, along with AMC being weak and that GameStop totally failing. Yeah, Research in Motion, RIMM. I don't think I've traded BlackBerry since it switched ticker symbols from Research in Motion. I'm curious to know what year it switched from RIM to BlackBerry. It was probably like 2011 or something like that, 2012. So that's basically it. It's an interesting market right now. So just to sum up, it's an interesting market right now because we just got this topping tail in an extended NASDAQ, an extended Apple, and an extended Amazon, right as we have the seasonality effect of the beginning of September here. But at the same time as that's happening, we're seeing these little short squeezes coming into place. We're seeing the IWM confirm relative strength again. How many days in a row? 1, 2, 3, 4, 5, 6, 7. This is 8 out of 10 trading sessions now that the IWM has been relatively strong compared to the NASDAQ. And yeah, it's exciting. The Roblox that I'm still in, we talked about that Roblox buy off $80 2 trading sessions ago. That gave some follow through, so I've still got that position on. So that was nice as well. I think that's all I've got for you guys today. So I'm happy to answer any questions that you guys got. So scrolling up here into the virtual trading floor. Yeah, Futu was another one. Futu is a Chinese company. Chinese names are strong. Futu breaking above 105. NIO was able to fully fill its gap despite giving a warning on car sales because of a chip shortage this morning. I sold some of my Alibaba position into the up move today, into that 175 that's established itself as a really important resistance level. JD tried to give a topping tail into extended territory yesterday at resistance and just broke it today. That's incredible strength. PDD went from that $100 breakout to 110 in a trading session. China is back. So yeah, Futu. WOOF. MGI. I'm an MGI. Yeah, I still got that one too. It's been boring. It needs to prove itself technically and start getting above here. 40% short float is Workhorse, 25% short float is WOOF. Chewy's getting destroyed. And I'm short AMC, Brant, so that's why. All right, first question I think here is from Jerry. Would you say if taking the triple D trade, it's another good one today, at the open, which was gapping above the inside day high, would you use yesterday's high as your stop initially? Probably. Let's see what the pre-market low is. Oh, excuse me. Let's see if the pre-market low was there and see if it was significant. Yeah, it's about in the same area, and it's not significant because there was no pre-market volume that was occurring. Yeah, I think if you're buying triple D off the open, you could have started with yesterday's high as the stop loss, and then pretty quickly when the ADMA caught up and this thing was making highs, you could have raised your stop to the low of the day, which that's usually what I'm looking for on a lot of those opening drive trades. When it gaps up, it's a little bit extended. I got to start with a little bit of a wider stop, but I'm looking to quickly raise my stop as much as I can to an opening low, something like that, which is exactly what Triple D would have let you do. So that is the answer to your question. Next here from Rich. I had 5 small green days in a row. However, I keep slamming my table and calling myself an idiot for not making more. You told me several times it's all about game planning, but how did you deal with emotions and rage when you were a new trader? Yes, that's a good question for sure. So first of all, even if you're upset with yourself that your 5 small green days are not 5 big green days, I want to congratulate you on the consistency that you're developing. The key to the business is consistency. And you want to focus on consistency before size. Have the consistency come in first, even if it's in a smaller way, and then add the scale to it. So don't beat yourself up too much. Now, the next thing that you want to do is you want to make sure that you do have the appropriate game plans in place for reward maximization. Are you leaving money on the table because you're seeing that you're making money and you're exiting positions like early? That's not good, because it's probably not going to work out for you in the long run. It's most likely, if you're exiting your positions early, it probably means you've had a really good win rate the last 5 days or so. And this last week plus has been a little bit better from a trading perspective. So definitely make sure that you are game planning for reward maximization, and that's also going to be the answer to the second part of your question, which is you're getting upset, you're beating yourself up, you're slamming on the table. I used to be a professional fighter, had 40 fights, won 2 world titles in 2 weight classes for pro kickboxing, and hand injuries are very common in that sport. I never have injured my hands fighting, but I broke my second knuckle on my left hand trading. And it still hurts me to this day when I spar. When I jab, I have to have all this extra padding on my knuckle because I got really angry about a trading mistake I made one day and punched the metal part of my chair, and my knuckle's never been the same. My biggest weakness as a trader has always been my ability to control my emotions in trading. It's always been my biggest weakness. I'm so much better at it than when I was younger, but I am by no means I've by no means mastered it. So for me, a huge positive that I was able to make initially was not that I wouldn't get mad anymore, not that I wouldn't lose control of my emotions anymore, but I wouldn't act on it. That was a really great first step to take. Like, yeah, I still got really pissed off sometimes. I still got mad at the market sometimes or whatever, but I never let it, I didn't act on it. I didn't let it change my game plan. And the way that I did that, and what I advise to people, is that the key to emotional control in trading, the key to battling most of the psychological demons that we have as traders, is through a written game plan on your trade. A written game plan on your trade. You can even take that game plan and like try to post it up somewhere so it's right in front of you. And then all you're doing is following what's on the piece of paper. It doesn't matter how you feel, follow what's on the piece of paper. It's so important. I even have a little sticky note here that I've since taken down because you can see I've added new positions. But you guys saw here for a while in August, I wasn't adding on any new swing long positions. And even though I don't fully handwrite out game plans anymore, I still sometimes write out little notes. What does that say? It says nothing new. It was a little note to myself so that I knew that I, from a portfolio management perspective, didn't want to add any new overnight long positions on. That was earlier in August. I still have that piece of paper here, but I took it off my monitor because it no longer applies with how I'm positioned and how the market's looking. But for a little bit there, the market had me nervous. I had a lot of risk onto the long side, so just a more simpler thing, nothing new, and I knew what that meant, right? To me, that meant no new long overnight positions with how I'm currently positioned. So hand write it out. And then other little things I would do, you know, I used to, here in the office, I would go down the elevator and I'd go for a quick walk around this building and the building next to it and just cool myself down. And just be like, hey, you know, it's just a stock. It even says here on my monitor, a trader gave this to me, a mentor of mine at one point, nothing personal, just a stock. You know, so I got that on there too. You know, it's just a stock, it's just trading. You just got to do the right things consistently over time. And the key to that, the key to doing the right things consistently over time is to have a game plan written out that's based on your rules. And that's it. So work on it. Next from Robert. I know you can't do anything about that, but would like to hear your words. I struggle to open another position once I'm in a profitable position, as I don't want to lose my profit from that trade. However, I don't have a problem to open a position once I'm in a bad trade, as I want to make that loss back ASAP, which can lead to more losses as I'm not trading but catching. Any words of advice? Yeah, for sure. So this is actually a similar type of question. It's also a trading psychology question. So basically what Robert here is saying to me in the question is, you know, hey, when I've got a trade going on that's working out really well, I hesitate to put on other positions because I am afraid to give back the P&L that I'm making in my good trade. However, if I got a trade that's not working out well, I'm ready to pile into other trades to try to make up for it. And again, the principles of reward maximization would actually have you do the opposite. So when you are in the money on a position, again, just being in the money, open P&L is not enough. You got to ask yourself, how much of this P&L is locked in? Have I raised my stop? That locks in some P&L. Or did I sell some of my position? That locks in some P&L. So based on the worst case scenario of the position that's working out, how much money do I currently stand to make? Maybe it's $500. And now you got to be asking yourself, all right, I got these other trades that I like. I can think about this $500. I can think about risk. I'm up this much on the day. How much of what I'm making am I willing to risk to make more? When you want to push things is when it's working out. When you don't want to push things is when you are getting smoked on the day. It's literally the opposite, but it's just a psychological thing that we all kind of have to struggle with just by being people, where, you know, that's our brains naturally have us wanting to limit our reward and maximizing our risk. It's just kind of how the human brain works, and that's what makes trading so interesting, because we have to battle these demons. So you just have to create rules for yourself, Robert. Those are risk management rules and money management rules that you have to create. Create your rule set, which is your business plan almost, for risk management and money management, for all different types of scenarios, and let the rule set dictate what you're going to do, not how you feel. Next here from Marty, ATER. ATER, 25% shorts between the 21 and the 50. Okay, I don't have the 50 on here. Huge option flow today. Pat, can you confirm that? There was. Pat says there was. September calls. Thoughts? I mean, that's what we're looking for. You know, I didn't really see this ATER, and I don't really know the stock. But generally, with how this market's been trading, that's what we're looking for. We're looking for more of these short squeezes to come in, like Skills, like BlackBerry. Look, I think AMC is worth $4. I think GameStop is worth $40. I think BlackBerry is worth, I have no idea, $2. I don't think any of these stocks belong at these prices. I got no problem buying them. If buying them is going to make me money because of this information, because short squeezes are starting to come back in the market, I got no problem buying them as shorter term trades or even shorter term swing trades as they close really well. So that's what I was thinking with myself on the WOOF trade. So I'm getting burned here with earnings after the close. I'm looking for, 25% short flow, major breakout of a big level. We saw some option flow come in. What you're describing is similar but different. I think that the technicals on this WOOF are solid because of the very clear level that's at 22. I think the technicals on ATER are a little bit sloppier because of this day. But you know what? This is interesting because it almost reminds me of Skills. Skills was super beaten up, right? Had a little bit of a base, had a huge wake-up day yesterday, then today it basically did this. Skills almost looks like this ATER from 2 trading sessions ago. So it'll be interesting to see if Skills is able to do something similar to what ATER did. And what you want to see is you want to see this stock get back above 9 now. Because 9 will probably be the next real trigger on the short squeeze. And one of the things I've been talking about here in the meetings, what's interesting about these short squeezes is that they can become, like, one can kind of lead to the next. Because if a fund is blowing up in BBIG, and they're a short fund, and they're also short Skills, or they're short ATER, or they're short WOOF, then they might have to start buying out of that position as well. And then because the short floats are so heavy in some of these stocks, Bed Bath & Beyond being another one, I wish Bed Bath & Beyond would wake up because I got a nice position in that. Because the short floats are so heavy in these stocks that if the one fund is blowing up in one company, so then it's got to liquidate on another one, that could cause another fund to start blowing up in that one. And you see what I mean? It just becomes potentially a feedback cycle where we see squeezing coming in across the board, kind of similar to what we saw back in January and February. But it's just interesting to see that we're not getting the same follow-through that we're getting in January and February as per Skills' downtick today. But Marty, I think your head is in the right spot. Next, Ernest. I remember you recently held a position in ZEV. Did I? I think we looked at this. I don't really remember being involved in it. I did trade it? Okay. Pat's reminding me that I traded it. Pat, do you remember which day I traded it? The first day here on the big volume? Okay. I don't think I kept it though, right? I think I would have remembered if I kept it overnight. Sometimes the ones I just day trade, they go in one ear and out the other. It's one of the former SPAC. Oh yeah. Okay. This had a day one pop on the SPAC. I think I may have traded it on that first day. Yeah, so I don't know what this company is first. Ernest is the first thing that I would say. I think I was just kind of lightning E-motors. I think I was probably just trading the price action that day. We're seeing a lot more SPACs do exactly what this ZEV did, where they're giving like a 1 to 2 day pop followed by failure, where the stock then starts trading, a good bit below $10. So I really don't know. I don't like that this is below $10, and you can see that it tried to get back above 10, and you got probably people who are underwater from 10, that's everybody's price, who immediately came in and were like, oh, thank God I'm break even so I can get out. This thing was just at 750 and I was smoked. So these SPACs become really hard when they start staying below $10 for a period of time, because it starts creating a lot of resistance at $10 if it ever gets back up to it. And I'd be curious to know if anyone has any examples of a SPAC that spends a significant period of time below 10 and then is actually able to recapture the level. Because I know that this UP, once it got below 10 here, has just been very weak. That's another recent one. I remember this Lots disaster. Once Lots got below 10, it tried to tick above a couple of times, but you can even see this. People were like, oh my God, I'm so out of the money at $8.50, that when it gets back above 10, and just all this supply came in, and they made that thing really weak. So I'd be curious to see if anyone could come up with an example for me on a SPAC that spent a significant period of time below 10 after the merger, and then was actually able to recapture 10. There's plenty of examples that we have of successful ones, like a DKNG or whatever, that have never been below 10, right? It was a good company, it was a good SPAC, deal got done, it traded up, traded at good premium, and then never came back down. So that ZEV, definitely worried about it. Not one that I would want to be involved in unless it's able to start holding above $10. Sebastian here, do you think that the market starts falling? Do you think that if the market starts falling, we can see a rise and more volume in small caps? That's the interesting question that I was posing to you guys before when I was doing my little kind of spiel in the afternoon meeting. When I look at Apple, Amazon, and the Qs versus when I look at the IWM and some of these small cap names that are squeezing higher. The answer to the question is maybe. I don't know, to be 100% honest with you. Do I think we can see it? Yeah, I think we can see it. Will we? Not 100% sure, of course. It's what I want to see. I will say that. It's what I want to see. But I don't know if we will yet. And that's why I'm constantly watching the market dynamics of the price action right now. Like it's interesting to me. That's why I said in mid-August, right? We saw a lot of these companies like this FSR have these big upticks and then fail. The only one that held up was actually Palantir of those speculative type names. All the rest of them failed. And now recently they've started to try again here right into the very end of August and now here in the first day of September. But then if you still got like an example like this Skills that gapped up to 14, they sold a little bit back down. That's not the signal I want to see if we are going to see what you and I appear to be looking for, which is a rise and an increase in volume in these small cap speculative stocks with potential weakness in big tech. Thanks, Brant. Brant was saying that AMC was my 4th best name, so I must have done pretty good today. I did. I had a really good trading session today. A really good start to September. I mean, I've made more money in September than August so far. Aaron K here. When is it appropriate to look at longer time frame, weekly, monthly? Spot has a hammer on the monthly. Should always be looking at all time frames. Should always be looking at all time frames. Dailies, weeklies, monthlies. My go-to chart is really the daily chart, and then I'll sometimes look at a weekly chart or a monthly chart just to get a little bit more perspective on things from a bigger picture. But time frame continuity is one of our layers of probability that I discuss in the probability class. Time frame continuity is when every picture, every time frame is giving you the same message, right? So sometimes you might have that daily uptrend, but you've got a not so good looking weekly chart, and then you don't have that time frame continuity that you really want to have higher probability and higher conviction on your trade. So you want to pay attention to all of it. Oriel asking about CMG short. It's sacrilege. How could you short Chipotle? Do you know how often I eat Chipotle? My wife would be very upset with this comment. I see no reason to go short Chipotle. This stock has been such a monster. Such a monster. I don't really see a technical signal for it. A little bit of weakness here, but it's just right in the moving averages. You've got really big support at 1850. I would also say I don't trade Chipotle. I just root for it. It's a very thin stock. It's a $1,900 stock that trades 175,000 shares of volume. I don't trade Chipotle. It's not a good trading vehicle. I don't see it as a short right now either, once the market really starts coming in. No revenge trading. Spotify was a hammer candle on the monthly for August. Yeah, it could be. I actually don't have a monthly on this chart. I just have a weekly. You can see that there was a weekly pivot here. You can see the month of August that it came down and came back up, so I see how that probably does look like a hammer on the monthly chart. You do have some, yeah, we'll see. Bigger picture resistance up at 280. Maybe it works its way back up there. Yeah, I don't have too much of an opinion on Spotify, to be totally honest with you, though. Next from Jerry. When providing liquidity, what were the net fees roughly per 100 shares? So the question is on ECN rebates. So if you are trading with an account that has direct market access, such as a professional account at T3 Trading Group or a retail account at T3 Trading Group, T3 does not sell your orders to HFT firms for money, which is how the brokerages like Robinhood and everything else make money. So since we don't do that, you have direct market access at a commission cost, and exchange rebates and costs are passed through. So I just recently got, just so everybody knows, my routing class is now on my training program. It's actually a 3-part class. So if you haven't watched my routing class and you have access to my training program, check it out. It's really just an afternoon meeting that we did one day where we devoted an entire afternoon meeting to routing. and then we cleaned it up, got compliance approval, and now we added it to the training program for everyone's benefit, so watch that. But how much you get rebated or how much you pay depends on the exchange that you route to. I typically route to ARCA or NASDAQ. Most of you guys are paying for depth of market in NASDAQ, so I recommend that you provide liquidity by routing to NASDAQ. ARCA and NASDAQ, last I checked, were the exchanges that pay you the most amount of money for providing liquidity. So I think that they pay $1.90 per 1,000 shares of liquidity provided, approximately. So again, what does that mean? It means for every 1,000 share bid or 1,000 shares worth of bids that I put onto the NASDAQ or ARCA exchange, I am getting paid about $1.90 for that order. The exchanges pay you for providing liquidity. You have to pay them for taking liquidity. They make money on the difference. Check out the routing class. So Jerry, I'm not 100% sure, but you can go into your prop reports and you can go into the detailed section of the drop-down window of prop reports, and in the detailed section it shows you how much you paid on routing. So it'll show you if you had a 100-share execution on something, it'll show you exactly how much you got paid for it. And what I every once in a while do actually in my own trading is I route 100 shares to like all the different ECNs, and then the next day I go into my prop reports to see how much I got paid for each route, just to confirm where the numbers are, because those numbers do change over time. Aaron asking about Legalzoom. Yeah, so Legalzoom, recent IPO here. You can ignore this other price action that's from the last time LZ was used as a symbol was in 2011. I wonder what stock that was. It was a buyout, I guess, at 135. So since then, this is the price action right here. So Legalzoom, this thing has done nothing since the IPO. Totally has gone sideways. Actually broke down a little bit to new lows. Volume on this is very low. It looks just very not in play. I guess the volume's actually not that low. I take that back. The volume's not low. It's doing a few million shares here a month. I'm sorry, a day. Volume's not that low, but the price action just looks totally out of play. $40 is the breakout level. You could put an alert out for 40 bucks, and I would say put an alert out for 40 bucks, and otherwise don't type it up. Ernest here, do you have any suggestion on recommended books to read on risk management? A recommended book specifically on risk management? I don't really. So I'm really trying to think. I've read so many trading books. Pat, you got any books to recommend that's specifically on risk management? No, me neither.
I like psychology stuff.
Yeah, I know. I got a bunch of psychology ones. You know, one good trade by Mike Bellafiore is a good one on prop trading. Market Wizards maybe gets into some risk management at certain sections of it. But I honestly do not have a specific book for you on risk management, Ernest. I apologize. But maybe somebody else here in the VTF does. Anybody here in the VTF have a risk management book recommendation? NAMCAP saying Mark Douglas, but I put that more into the market psychology. Andy's saying any book on technical analysis. Yeah, I guess that's actually a good point. You know, technical analysis is inherently a system of risk management. My favorite book on technical analysis is Technical Analysis on Multiple Time Frames by Brian Shannon. It's not a huge book. It's a simpler book, but it's one worth looking at. Diego here saying check out Van Tharp. Risk reward. Gets into the R's. Sahil saying, I did my master's in risk management, and no matter what you read or learn, it's never enough. Yeah, for sure. Josh has some good book tips, but Josh is out this week. Sahil says that there's one by Peter L. Bernstein that you could look into. Peter L. Bernstein. Can I repeat the book on technical analysis? Yeah. Technical Analysis on Multiple Time Frames by Brian Shannon. Again, it's a relatively simpler book. Yeah, Against the Gods. I think that is the Bernstein book. I haven't read that one myself, but I've definitely heard of it. It's a well-known book. Okay, so there's some things for you to look into, Ernest. Varun saying AMBP was $10 for a while. Was below 10 pre-SPAC. I don't have the SPAC symbol. I only have the one after it. Yeah, but was it only trading at like 975? Because that's where a lot of the SPACs are trading. Is a little bit below 10 to make up for the value. I specifically want a SPAC that goes below 10 after the company gets announced, is below it for a significant period of time, and then comes back up. Not when it's just the actual special acquisition vehicle. Royal loves Chipotle, but not the stock. Yes, still don't think it's one that what is going on over there? I still don't think it's one that you want to trade too actively. Ricky's saying Moe's is better than Chipotle, buddy. We're gonna have to agree to disagree with on that one. Yeah. Pat here from Marty. Palantir and Tesla are a big tease. Let's look at Palantir. Palantir looks good, man. I'll look at the weekly in a second, but this daily chart, this daily chart looks really good. The way it consolidated that gap up, and now it's continued higher. It gave a shooting start 2 trading sessions ago, but there's been no price correction off of it. It just led to a time correction, an inside day and up. I guess let's take a look at the weekly chart. Yeah, I mean, look, the weekly chart, just you got to realize that the move that a lot of these stocks gave in February was just absurd, and they didn't belong up there. And even though I can't argue against the technicals being bullish in Palantir, I don't like this company. I think it's a garbage company, but Kathy keeps buying it. It keeps going up. I think the weekly chart actually looks okay. And it starts clearing above 26. It could start going here again. I think the technicals in Palantir look pretty bullish. I hate to say it because I really don't like Peter Thiel and I don't like the company. But, it looks good. Tesla's your other tease. Tesla's also looking good again. Tesla, like a lot of the other speculative names, had its speculative top here in January, February at a crazy price, had a big pullback, and now it's kind of been in this grindy upside wedge type pattern that's trying to break out of. So I think that this Tesla looks pretty good here above like 725, 730. So yeah, I definitely think that they look decent. Let's keep an eye on those. Those are the types of stocks right now that I'm looking to see if they catch bids. A friend wants to know how much you need for a retail account. So retail accounts are subject to the pattern day trading rule, so they have to maintain a balance above 25,000 at all times. So the minimum to open up a retail account with T3 Trading Group is 30,000, and if it ever dips below 25,000, then we ask the account holder to put in more. The retail accounts at T3 are really for people who are sophisticated. I just would put that out there also. It's not for the kind of hobbyist who might be better off in like a TD account where they're selling your orders out to HFT firms, because as cool as it is to have direct market access and how it does lead to better trading execution, there are monthly costs. There's a platform fee. You have to pay for some market data. And there is a small commission cost as well, and it's direct market access just like a professional account, so you got to know a little bit about routing for cost benefit and everything else there. But if you have someone who is interested in a retail account, send them my way. And we are still doing this thing right now for the professional traders here at T3, where if you recommend over someone who opens an account with T3, we're given a $500 referral fee into your account for once their account is open and funded. So if you guys have any good candidates to be professional traders, send them over to me or to info at T3 Live, and you can participate in that referral program. You guys are nuts if you think that Moe's is better than Chipotle. Nuts. Completely nuts. Namcap saying Minerva's book Think and Trade Like a Champion is also good. When Genius Failed, yeah, it's definitely it's the long-term capital management book, right? Definitely a pretty famous one there. Palantir had a 40 million share ticket yesterday. Is it a cup and handle in Palantir? I could see an argument that this is a sloppy kind of cup and handle. It's not great. So really a cup and handle should have equal highs at the resistance as the handle's created, and it needs to be coming from an uptrend. So you could kind of make the argument that this was coming from an uptrend if you start with the May low, but this high here should have been roughly equivalent to this high here, and then it pulls back off that to create the handle and then the continuation. So it's a little sloppy if we want to call it a cup and handle. Yeah, this is so. Well, the problem with calling this a rounded bottom is that a rounded bottom is a reversal pattern, and it wasn't really trending down so much into the rounded bottom. I mean, you could make the argument correctly that this is a downtrend and it rounded back up. Okay, fine, but you know you're kind of pulling teeth a little bit on some of those patterns. I like them to be a little bit more cut and dry. Another guy from Moe's? I don't even know how to pronounce the name of that restaurant, Andy. Qdoba? You guys are nuts. You guys are nuts. All right, it looks like I covered all the questions, and now we're just turning into a debate on Chipotle versus Moe's. I'm going to end the meeting there because it's a little bit after 5 o'clock. Great start to September, guys. Awesome communication. I love when you guys make me money on my trading more than anything. I love when you guys make me money trading even more than I love when I make you guys money trading. So let's keep all that up. I'll see you all tomorrow. Have a great night.